Hello again, this is Adam Hewison. I'm coming to you as always from the digital studios of MarketClub, and we are once again looking at the Euro USD relationship. That's the Euro against the USD. We're looking at a daily chart going back all the way to 2001, and it's a daily chart, and as you can see, the dollar has been going down, or in this case the euro has been going up, which means the dollar has been going down. Now when the market breaks like this, it means the dollar is getting stronger. There's another way to show this. We could show you a USD EUR chart, which would be just the opposite or the mirror image of this. But for our purposes, I want to show you that the dollar has basically had some periods of strength, but generally speaking, the euro has been in a pretty steady uptrend from around about 90 cents, where it's back in 2002. Now, we're going to fast forward and go to what we think is going to happen now. And some very interesting things are happening. So let's take this off the screen and let's just go to zoom this in, and let's look at the last maybe 6 months. You see how easy this is to do with MarketClub? Now what I want to show you, I'll scope this out a little bit so you get an idea. What I want to show you is what's been very consistent is these swings from here to here and from here to here, and we think there's going to be another one, and it's going to be from here to here. Now the question is, how far are they going to go? Well, if we look at the first swing, which is right here, the high in that swing was, I'm going to put the number right here, 136.62, and the low right here was 124.54. Okay, so we take the difference from here, and that comes out to be 1208. Okay, now if we take the low from this level here, which is 128.86, and we take the high that it reached here at 140.99, it gives us a difference between here and here of approximately 12.13. Now isn't that interesting? Over a course of several months, the swings have been almost within a few pips of each other. In this case, 12.08 for this first move right here, and then 12.13 for the second move right here. So that's a 5 pip difference, which quite frankly is nothing in the scope of things. So what's going to happen? If we're correct, and this is an energy field, which we believe it is, the move from here, let me take everything off the screen, we've got a lot of things, but remember the average, let's say the average here is approximately this number, 1210. So let's take everything off the screen. So if we're right, the market should move from here to the upside 1210 pips. Okay, so if we're looking at a range here around the 137.47, which is right, 137.47, and if we add our 1210 pips on there, that brings us out to 149.57. So that would be our target zone. So that's our target zone. Now we're currently trading, we're doing this live at 141.24, so obviously you can see there's a pretty attractive gain on the upside in this market, meaning the US dollar will be going down against the euro. So let's take this off the screen and let's scope this in. Let's look at some very key levels that you want to look at. First of all, I'm going to put our trade triangles down. So we use our weekly trade triangles. As you can see here, we have a go on a weekly triangle saying it's higher because we use the weekly. In Forex, it's the weekly for trend and the daily for timing. And here we are. Here's our indicators. Even the monthly is positive, good sign. The weekly is positive, and the daily is positive. So we've got a plus 100 reading here. And let's just move this up here. So it's a plus 100 reading, and it looks as though we can see this market go higher. So all the triangles, let's scope this in just a little further, all the triangles are in fact positive. You can see we had a daily triangle here to be a buyer at 140.48. The market's currently trading 141.20. Now we're looking for this market to move all the way up. I'll have to scope it out again. All the way up to this level right here. Now that's going to be very key. If we get to this level here, that's going to satisfy, let's take this off the screen. It's going to satisfy these moves we've had here. So that's what we're looking for. First target zone is going to be right around the 150 level, 149.57. Now the question is, if we get there, does this then become what we consider to be a pivot point? And I would say yes, it does. We've got the criteria, the double bottom, potential pivot point, it moves over there. Then this could measure up to around the 165 level. So this would take us back to a new high ground. I think this is going to be the ultimate target zone for the euro. So let's see what happens. It means considerable weakness in the US dollar, so let's see how it plays out. But one key level you want to look at very carefully, and I'll show you what that is. I'm going to take everything off the screen again. I'm going to scope this in very, very close. So this is the area right here on a close-only basis, and it's 141.13. Okay, so if we see the euro close, it's currently trading over this level right now. If we see the euro close over this level either on Thursday or Friday, we are going to see this market move up to the target zone we have at 149.57. Hey, Adam Hewison here. Thanks for taking the time to watch this video. Thanks for your business if you're already a member of Market Club, and if you're not already a member of Market Club, check out those trade triangles in Forex. I think you'll be very surprised at how well they do. Thanks for watching.